Yep, go ahead. Sorry.
Yeah. When you do the fib retracements, you don't take the most current trend. You take the previous trend and you draw a retracement between the highs and lows, correct? Most often?
Okay. The best one is to take the recent swing high and recent swing low.
Okay.
But I will show you another example. So if you go out on a weekly, okay, and let's say this could be a little farther, but if you draw a fib right here, so you could see that it retraced 50% of it and started moving.
Okay.
Longer the time frame, more important it is, because most of the traders and investors, they work on different time levels, the small. So for the longer ones, you have more traders giving importance to those levels. Okay. But if your trade is for a few days, you will start with the shorter one, and actually for this one, I guess for this one, this is your swing low. Yeah, but I don't think that fib is going to make a huge difference. And what I do is I draw multiple of them. I just don't draw one. I draw multiple of them.
That's the reason I had that question, because
I do the multiple, and I see which one coincides the most.
Okay.
Okay, and that will have the most importance. That level, that price level.
Okay.
And again, as I said, the price action is more important than anything else. The price action, just the price action is more important than anything else. I mean, last time I was saying, this is something I have been seeing for a very, very long time. Every time it makes a high, the distance when it starts to reduce, or the distance between them gets reduced every time it makes a new high, it means
then it is slowing down, right?
Yes, and that's the end of the move higher. That is the end of the move higher. So these are the things that you watch, and you see the importance. And if you look at this pattern like 5 or 10 times, this will be imprinted in your brain. Okay, next time, as soon as you see the new high is making at a very short intervals of price and time, you will be cautious.
Maybe I remember you teaching this sometime in the past in your webinars, but probably I misunderstood. So it is the distance between the slope line, right? Between the previous higher high and the following higher high. If it continues to reduce, that is when the momentum is fading, correct?
Yes, that's right.
Not the amplitude. I interpreted that as the amplitude from the
longer period, basically.
Low to high.
No, longer period. Well, actually, it should be both, right? I mean, you cannot have no, you are right. But the thing is, let's say if the market moves sideways and made a top here, okay, the distance from here to here, how much it moved is more important. The reason that happens is because you are getting more sellers. You see, I mean, if there were more buyers, it would go straight up.
Okay.
But, so especially if you read the hold on. There is this book called Technical Analysis using Multiple Time Frames, like by Brian Shannon. So he explains the 4 stages of the market. Okay, the first stage is consolidation stage. So when the market has harder time moving higher, that would be the stage number 2. The stage number 3. Number 2 is where it moves higher. Stage number 3 is where it moves more or less sideways. I mean, it has hard time. I mean, that's what we are seeing. I think right here is many of the retail traders, I mean, after this huge move, many of the retail traders, they are still trading it. Okay. And the long-term traders or the institutional investors, they are trying to take profits. That's the only reason.
Like distribution phase, right?
Yeah. I mean, this is a huge, how much is that? It's almost 8 months, 9 months.
Right.
Okay, 9 months sideways move means there is so much of selling coming in from the long-term investors. Yeah.
And who's the author? Channel, you said?
Brian Shannon.
Shannon, okay.
I'll send you a picture.
Okay.
The Slack room. I have a bunch of books. Actually, I can send a picture of all of them.
Okay, that's great. Last time you recommended me that Options Volatility. What was that book? Yeah, I still have it. It was a complex book. It was very hard for me to read and analyze. Option as a strategic investment.
The big Bible kind of book.
Yeah.
Yeah. Well, I mean, it's
so much mathematics in it.
Yeah, I mean, this one, options trading, the hidden reality. I think Charles Cottle. I think that's the best book ever. I mean, if you go through the entire book, you don't need to know anything about options anymore. It explains. Okay. I mean, I'm still working on it. I still don't do a lot of complex options, which I'm still working on.
Candor, fine candors and all. I've never seen you take collars or candors. Yeah. And KP, I think just to make sure that my interpretation is right, whenever you're showing this consolidation zone there, right? So if it ever breaks that consolidation zone, once again, you're setting your target as the height of that consolidation zone as the target for the next move. Is that right?
Yeah, from here to here. It's basically a box. So this height is what it will move. But I thought it was going to move right here. That wasn't what? March. We are still here.
Oh, okay. KP, what is the book for options?
Say that again.
What is the book for options you were saying?
Hold on.
Or you can ping me in the chat. Just ping me in.
Options trading, Risk Doctor, options trading, the hidden reality. I'll take a picture and I'll send it to you guys.
Or put it in the webinar.
Yeah, I will. All right. Any other questions? Actually, let me see.
So, KP, I missed the first few minutes. So were you saying that the market could pull back to some 4190 area? Is that what you were sharing?
No. I was explaining the concept. No.
Okay.
No, it's market right
now. What is your overall? Looks bullish, right?
Yeah, it will probably move sideways. I mean, couple of sideways days would be better. I did not expect a move like this today, but again, I was looking at this level 44.77, so it went right there. So couple of sideways move would be better, something like this.
So KP, I never understood because of the market conditions we have now, right? I know this breakouts. Some of the breakouts are happening and some of them are failing, right?
Yep.
For example, I don't know. I mean, coin, whether it's a breakout or not, but still at least it's going. It's just moving up.
Yeah, I'll get back to it. So this is a consolidation we see. So if a consolidation happens here, sideways, and a move higher from there, would be ideal. But there is something that's on November 3rd. Well, we still have some more time, but on November 3rd, we have another Fed meeting. So that's going to be important. And we do have some earnings in the next couple of weeks. So I think we have Netflix and Tesla this week. So that's gonna show how the tech market is going to move. So
no, tell me this, how can this ES and Nasdaq will help the stocks? Because they're individual. I understand, but overall, but technically, if you have good stocks, they may move with them or away from this ESR and Nasdaq, right?
So a lot of traders, a lot of investors, this is what they're watching. They are watching. Okay, there are two reasons. One thing is a lot of traders are watching the indices. Okay, if you see this is what they say. Selling begets selling. So if the Nasdaq starts or ES starts selling off, right, they will start selling whatever they have in their portfolio. One of the reasons is a lot of people are trading with margin. Okay, if they are trading with margin, they want to get out when the market starts falling. So that's how the selling begets selling. And then this ES is composed of everything else. So if you take 10, 12 years ago, if Walmart gave really bad results, okay, everything else used to go down. The entire market used to go down because Walmart is so big, it has its tentacles all over the place. Okay, if Walmart is not doing good, a lot of other companies, many of the retail wouldn't do good. So I mean that's how you can guess how that sector is going to be. See, and the second reason that I was talking about is the ETFs. Okay, a lot of people are now they are just buying SPY. Okay, if they are just buying SPY, if they are selling a lot of SPY, every time they sell one of these, all those 500, I don't know how many they are right now, but yeah, 500 plus companies, they are all being sold at the same time, right? I mean, that's how the ETF would work. So as soon as this goes down, everything else will go down with it. So if the market, even if there is a stock that is really, really good, if the market is going down, it will go down with it. It cannot survive alone, is what I'm saying. Right. Any other questions? My expectation for the next few days is probably move to a side. Couple of when do we have it? Is it day after tomorrow? I think it's day after tomorrow is Tesla. I think.
No, Tesla is tomorrow.
Oh, it's just 10:20. Today is 18. So yeah, on Wednesday, that's what it says. So, and Netflix is also on 20th. This is tomorrow. So we'll see what happens with those. I mean, if the economy is really good, every standard or every good company is going to do really, really great. You can gauge how the economy is doing based on their results. Well, I mean, we don't gauge, but the market does. And we follow the market. That's it. But Tesla is already there. I'm surprised that. I mean, I could see that there was not a lot of resistance in this space, but that's a very fast move. 7% maybe. I guess so.
Where does it end at Tesla, KP?
Where does what end?
Tesla.
900. Well, I mean, right now, if it breaks 880, the next one is 900, right? So
then the sell-off starts.
Why would you expect there will be a sell-off? It depends on how their earnings are. If this breaks out after their earnings, it's going much higher. I mean, we could probably see, what is that? 540, 900. That's $370. Is it? Yep, $370. So that's 1270. Yeah, that's 1270. I mean, it's not like the company is not doing good. It's the only one that's doing good right now. I was watching one of the documentaries about what happened with the whole chip industry, especially for the vehicle manufacturers. So what happened is GM and Ford, both of them, as soon as the pandemic hit, they stopped the orders for the chips because they didn't know when the new orders to buy the vehicles would come. So, and Tesla did not. That's the reason Tesla is doing so much better than GM and Ford right now. GM and Ford.
No, but see, Tesla raised like almost $5,000 for every car, right? They raised $5,000, and I don't think other car manufacturer can raise that much price and still sell 10 million vehicles, right? So
actually, I mean, this is not from the news, but I went to New Jersey a few weeks ago. So one of my friends was telling me that over there in the Mercedes, they went to talk to a Mercedes dealer, and the dealer was telling him that they can order a new Mercedes, but they have to pay $10,000 more than what the MSRP is. Okay, they can order it now, but they cannot guarantee you when the vehicle will reach them. It could be 3 months, 6 months. So I mean, it's not like there is anything available at all.
No, right now, like if you try to buy a Honda Odyssey, you can't get one. It's dealers are having a really, really, really great time because they are essentially using this like, I don't know whether you remember in India, there used to be shortage and you had to pay first and then book a car, then it will come. It's an exact situation. Any car, you try to buy any car, zero negotiation, and everybody's taking more than MSRP.
Yep, that's how it
almost
is.
All, yeah.
Yes. But I think because there are not enough cars, if you look at Carvana, these things, CRNA, CVNA, yeah. So if you look at Carvana, it started moving lower. When is that? In August, and it is not recovering at all. There is a possibility that they don't have cars to sell anymore. Okay, if they don't have cars to sell,
Yeah.
they're not they don't have much of a business. And I think we talked about this before. I mean, what is that?
Yeah.
$22 to $300. So
yeah, friend of mine who had a Model 3, who used for almost 1.5 years, and he could sell at the same price he bought it for.
Yeah.
Used, like there is a demand for used car as well. So
there are no cars. There's demand for
there are no cars. Yeah.
So yeah, let's go back to, let's look at NASDAQ. What the one surprising thing that happened today is the strength in NASDAQ. If you look at it, ES, it broke 50-day on this day, and NASDAQ is broke 50-day today. I think I mentioned this in the Slack group. But so ES was very strong. That's because of the financials. Today, tech is very strong. I mean, everything went up today. I mean, all the mega caps. Microsoft was up, Apple was up, Facebook was up, Amazon was up. So, and I'm sure Google was up too. I didn't do any trades here, but yeah, they are all up about at least 1%. Yeah, Amazon 1%, Apple 1%, Microsoft, Facebook is up 3%. So,
did you buy any of these mega caps, KP? They were on sale, right? Like 2 weeks ago, I think. I don't know.
I'm not doing that anymore. I'm only now I have a concentrated portfolio right now. For the long term, I have about 14. I have about 14 positions. So that's the 14 positions, 5% each, and or else I'm unable to do both my trading and also the long term. So, and I am only buying the high growth, and I'm not giving a lot of I mean, I have much shorter leash on each position. So yeah, I'm not going to buy them anymore. That's what I'm saying.
Okay.
And then
so is it because the percentage upside is limited?
Not really. See, the thing is, if you buy Google and Facebook, you just buy them and keep them for a very long time, and they're gonna whatever the stocks. Let me share you this. So now I have a new. Can you guys see the MarketSmith?
Yes, KP.
Yeah. So I'm doing everything that has a relative strength of 99. That's it. I'm looking at this one, and also the high volume, and probably the IBD, this growth 250, and also 50. I mean, so this relative strength, I talk about relative strength all the time. So I want to only trade the one that has the most relative strength. So I was talking to somebody a few days ago. So this is how I used to do my analysis. My analysis used to be, I wanted to talk about this a few days ago too. It's called top-down approach. So top-down approach is you first wait until there is a breakout, or once the downtrend is over, that's when you start buying the stocks. That's how it used to be. That's how I used to trade for many years. But in the last year or year and a half, what I've been observing is I've been following a few people, the books basically. So they do they start from the stocks instead of from indices. They start from the stocks. So the reason I bought all those stocks, before this correction was over, is because by the time the correction is over here, most of the stocks that are the leaders, their move is already, it's moving a few less, like 10-15% already, that we have seen this time, right? I mean, the first one that I added was Net, and let's see, when was this? 10.6. What was ES doing on 10.6? So this is where it is. We don't know if there is a bottom or not. And Net was already right here in relation to its previous price. So it bottomed when it bottomed. Okay. So even let's say it bottomed here. That's 10.1. So what is ES doing on October 1st? That's when it bottomed too, but we didn't know that. It moved sideways for another 3 days, then it went up, came down. So this pattern always takes longer. So that's why I am starting with the stocks, and I will verify if the market concurs with it or not. So after I buy, I see if the indices are making newer lows or lower lows or even lower highs, I will probably start trimming them again or get rid of them. So that is what I'm doing right now. And this time it has worked really, really well. And also one positive thing this time around was the seasonality. We know that most of the time in mid-October is when the stocks start to bottom, and we'll see the move for the rest of the year. So that's the story. But I mean, top-down approach is still better if you are trading stocks like Facebook or the mega caps, or but the growth stocks that are in their starting stage, or as they call as base 1 or base 2 of their formation, they are going to move first before most of the stocks that I own right now, they have already broken out to new highs, while ES is still working on it. Same thing with NASDAQ, right? Look at Microsoft. One of the reasons I bought Microsoft is because of this breakout. It's already at all-time highs, and where are the rest of them? They are nowhere. Apple is right here, and it might take a while for it to go all the way there.
When did you buy Microsoft, KP?
Today.
Oh, okay, today. Okay.
Yeah. It's an option. So okay. Google is probably a little better. Amazon is so far down. That's going to take a while. I guess the earnings we'll know by earnings what happens with Amazon. And Facebook is all the way down there. So the best stock right now among the mega caps is MSFT right now. And if we are looking at, Tesla is obviously looking better. It's almost at the highs, and its market capitalization is, how much is it right now? It's 860 billion, so not very far to be a $1 trillion company. So another $130. Yep. And also I'm looking for the ones that have I added this one. I've been watching this one for a while. So I think it broke, but it couldn't move further. But I'm guessing it would. And I think this move happened when they pre-announced their earnings or something like that. That's what this day was. So, and it did pretty good. All it did was.
Is it also leader, KP?
Right now it feels that way, yeah. So
I mean in the market, Smith, is it 99 also?
Oh, I don't know. I don't know. I didn't even check. Hold on. No, it's only 75. But I've traded this many times. Yeah, it's not 99. It's 75 also. Let me you know what? Let me check. So there are two kinds of RSIs here. So one is 6 month RSI. And there is this 3 month. Let me check. It's 77, not so great. 6 months is 89. Okay. Yeah. Let's go back to the chart. Let me know if you, I mean, I don't have a lot to talk about. The only thing that I'm looking for right now is, you know, for it to consolidate a little, and I have about 65% of my portfolio in the market. I'm just, that's it, just the stocks, and I have some in options, maybe 5% or so in options. So I'm about 30% cash right now. So the only reason that I have that cash is also because there is a possibility that we could see that's what I expected today, a little bit of pullback. There wasn't any. So something like this and probably move higher. But again, you know, we have earnings anyway, so we'll probably see what happens with the earnings. That will, you know, tell us the direction of the market.
Tesla usually goes down after earnings, right? That's kind of in trend.
Well, I mean, the only thing that we can rely on is the price, and the price that we don't know. That's it.
Okay.
I did not, and I have been talking about Tesla during the correction, saying that while the correction was happening, look at what the Tesla did, right? I mean, at 10.1, so this is when the market went down, and what did Tesla do? It moved sideways. And I've been saying that, you know, when you see this kind of consolidation while the market is going down, this is going to go much higher. There is a reason why they are buying this. I'm sure we don't know, because we don't have the resources to do the research, or, you know, we don't have all the information. So yeah, I mean, I would never assume what happens later. Okay, there is no way anybody knows what is going to happen in 5 days or 10 days or even tomorrow for Tesla. Even though we see those, you know, 12-month ratings, or, you know, the price targets and everything, that is based on the information they have at that point. And that information changes every day. So the only reliable indicator for us is the price. And how, and the relative strength of the stock, you know, relative to the market, obviously. So,
hey KP, is Zillow dead meat? I'm stuck with Zillow.
well, actually, I saw Zillow today, and it felt to me that it might be bottoming today. That's what it felt to me. So
should I average it?
No, don't. No. I sold Zillow a while ago, but
I can't sell it, so more than $80.
Yeah. Well, the thing is, today they said they are stopping. So one of the, what is it called?
Home purchase.
iBuying. iBuying is what it's called. So they buy the houses and they sell, right? So they said they're going to stop it today. It's not because it looks like they have more inventory now than what they can sell. So they're still working on it.
Yeah. No, it's not the inventory. They are not able to refurbish those houses.
No, I mean, what I'm saying is they already have a bunch of houses that they did not sell yet, right? I mean, that's what I'm, I mean, so obviously the market has slowed, right? I mean, when the market slows, they won't be able to sell enough. And again, the thing is, if they keep continuing to buy these and keep on their books, that could be a very big problem, you know, come earnings, if they can't sell it. So, and if you look at Open, I think most of the market, the iBuying, I think 70% of the market share is by Open. I might be a little bit, my information may not be current. This is probably 6-7 months ago, but yeah, they are the big players. Open is the big player. I mean, and the reason I bought I bought this one is because as soon as it broke this level, I'm like, okay, this is making a. I mean, I had this alert so many times, and today, but it could not move higher. It came back really fast, and I was not very. I did not have a lot of conviction because of all this, supply right there. All these guys are waiting to sell on every pop.
KP, how do you identify supply on the graph? Like, how do you what are the indicators? Like, when it's buying.
No, I mean, supply means there are people who bought. I'm sure there are a lot of people who bought here, right? And
okay, and based on what? Green candles that you see there?
No, all the candles, all the volume that you see. You have seen, okay. What I'm saying is when I say supply, there is a lot of trading that happened right here. That's what the supply is. So anybody who bought here and did not sell, they are going to sell it, just to break even. When it hits all-time highs, there is no supply. And that's one of the reasons about, and the problem with Zillow is this could take a while. Unless they really do really good with their earnings, this could take a while for it to, go back on all the way to 212. Or if we go into a recession, this might take 10 years from now to go back to that 200 level. So I used to have much bigger price range to get out of the stock. I think I sold somewhere here, I think, when it broke this level. But I mean, that's a bigger move. But I have been selling while it went all the way there, and I probably sold like 3 or 4 times by the time it hit the 200 level. But this is not sustainable, and this V pattern happens all the time. When you see a parabolic move like this, it comes down the same way most of the time. I know there are 2 reasons that I can think of why people do not sell when they have losses. Number 1 is they don't believe that they can find something else to replace it that will do better than this. And the number 2 is, what if it comes back as soon as you sell it? Believe me, in my experience, you sell it and give it a break. Okay, look for something else. Look for a pattern that you like. Look for a pattern that will really work for you. You don't want to get into this. I mean, even for ES, in September, I went to 100% cash like 3 times, and it only worked once. I think during this time, I sold it 3 times. It's not like I knew this could have happened here or here, any other place, anywhere, here or here or here or here. It could have happened anywhere. There is no way to know when the pullback is going to be larger. I mean, this could have gone all the way, 20%. I mean, we have seen 20% corrections multiple times in the last, 5 or 6 years. So if you don't sell it somewhere here and wait for it, it could go all the way here. Nobody knows how far it could go. So this will take a while. Believe me, this will take a long time to digest that. You have to get rid of it when something does not work. But once you start getting used to it and start doing start selling it when it doesn't work, when the market turns around, you'll make much more money.
So KP, you bought today MGM. Is just because it was all-time high, or there is some other reason?
No, it's not just that. So actually, let's go. Well, I mean, actually, you can see it here too. The volume here was high. Let me go back to that. I have been watching MGM for the last 3 days. So hold on. So you had, so this icon says largest volume since the base. So how much was it? 28 million, right? You don't see 28 million anywhere. Okay. So when you have such a big move, generally you will see a pullback. Okay. You will see a pullback all the way to, let's say, 46 or so. Okay. I was waiting for a pullback. There is no pullback though. It means that there are people who are selling right here, but that has been absorbed by other, players who wants to accumulate this, accumulate MGM.
And daily chart?
I'm sorry.
Is that a weekly chart or daily chart?
No, this is a daily chart.
So daily chart 15 million volume on the
28. That's what I'm saying. This is MGM. Yeah, this was 28 million.
So bigger than all the previous. Okay.
Yeah, much bigger than. I don't see. Actually, what is that? That's 29 million, and that's a red day. That's not a green day. That's a red day. So we haven't seen a green day with this kind of volume since. That's a year. This is September of last year. So when you have that kind of volume and there are no pullbacks, either there are two ways I could buy this. Either wait until the breakout of this high or this consolidation, or start with a pullback. So that's what I did today. I want to see.
You just bought the stock because it's a more safer way. You did not buy the option.
No, I think this okay. So for me to buy options, one reason is I don't want to be I don't want to keep that in the long run. That's one reason. The second thing is if the volatility is way high. So for example, Task, right? It moved 12% today.
Yeah.
Okay. What if something can move 12% up, it can move 12% down too. Okay.
That's true.
And most of my stops are somewhere between 7-8%. 8% is probably the max. So I will be stopped out right away in that volatility. So for this, if I put whatever amount for my option, I know that's the worst that I could lose.
Mm-hmm.
So those are the ones that I buy option. And for the stocks, and MGM, I think, could be a leader going forward. That's the reason why I bought stock.
Okay, so in case if you get stuck, you are okay to keep it for long time.
No such thing. But
okay.
The thing is, for options, either I have to roll,
yeah,
okay, or cut, or sell a little bit at a time, right? But if this thing goes up, I don't know how much. I mean, the way this is acting, I don't know. This could probably go up 30-40%.
Okay. Mm-hmm.
So,
okay. So my next question is about the Task, right? There is a secondary offering today. So are you planning to keep it or like?
I have no idea. We'll see what happens tomorrow. I would want to keep it until they come out with the price.
Okay.
They said that it's 10 million shares right now. So I want for them to come out with a price, and when they come out with a price, I want to see how tomorrow it's going to be down. That there is a very high possibility it's going to be down tomorrow. But
so you planning to average it out then?
No. I'm going to wait it out. Most probably, I'm going to wait it out and see how it reacts when they have that offer price. Right now, they don't have an offer price. They just said they're going to sell it.
Oh, okay. Okay.
Yeah. So what happens is, well, I mean, this is a recent IPO. I don't know how it's going to end, but in general, what happens is, let's say if they are using that money to acquire something, or let's say they are using that money to expand it. If they are using that money to increase their EPS or sales, that would be a positive. Believe me, it's not going to go down. It's actually going to go up.
Okay.
And I've seen that happen many times. So we're going to wait and see. So far, look at the volume. Volume has been pretty good. I mean, it's not that bad. And I was also looking at when was this out? 6. So 12. So and somewhere in December is when you have that lockout period, lockout expiry. So, well, we'll see. I mean, these things will happen. Believe me. I mean, one of the biggest problems with trading IPOs is that there will be secondaries always.
Yeah. And that's why I'm just planning not to carry on for now a day trading kind of thing. Just to have it, if there is some profit, just sell it because you don't know tomorrow what happens.
Well, I mean, this does not happen to everything, right? I mean, let's say if you are trading, if you are trading, let's assume 100 trades, you are taking 100 trades a month. You'll probably have 1 or 2. If you are unlucky, it will probably happen once or twice. That's it.
Okay. Yeah.
And that could, I mean,
any thought on Chinese? Oh, sorry, you were talking still. I don't know. I keep
go ahead,
seeing that you're not talking.
No, go ahead. Which one?
Yeah, I wanted to get your view on Chinese, like Baba, Baidu, and all those Chinese stuff.
I know. I've been watching it, and I saw the guy. He was saying that we might have bottomed here. Maybe we might have. We don't know. They have to. So I don't know if you followed this or not. Last week, these things went down because they were trying to regulate these now. The brokerage firms, Futu and Fintech, both of them, they went down because of that. See, what they are trying to do is regulate so that there won't be any collapse in the market. But by doing that, stocks are correcting big time. This is as good as having a recession in China. I mean, that the way the stocks are moving, yes. When is that? So it lost more than 2 years of profits. Actually, it's almost right here. So since when is that? What year is that? 2014. If you see, for 7 years, we didn't move much, right? So we don't know. And last week, is it last week or the week before? Berkshire Hathaway or the Charlie Munger, they bought huge amounts of Baba, but they can wait another 10 years for this, and they want highly liquid names. So, I mean, talking about the technicals, looks like it might be bottoming, but it has to break that 170 level at least. And we will probably see buyers coming once it breaks the 50-day. So this 50-day will probably move down for a while, and it has to move above 50-day at least for to see the buyers come in. Actually, that's not even the 50-day because actually it's already above 50-day. That was a weekly chart. Yeah, it's already above 50-day. Who knows? It might be turning around. Yeah, I mean, RSI says for KWeb, not for Baba, but for KWeb, looks like it's making higher highs. So that's a good sign. Yeah. So while the price was going down, this was going up. So that's a hold on. I'm getting some. Okay. So yeah, this is a good sign. I mean, but again, it went down what? It's more than 50%, right? Yeah. Maybe this is it. And I think I've sent an article yesterday, or is it today, about their Evergrande fiasco, how big that is, and everything. Jim Chanos was talking about it. They are saying they are a lot more levered than everybody expected them to be, and you cannot prosper with leverage is what the whole article is about. They have been, they were building apartment, not just complexes, for cities of apartments for a while, and that has become a problem. I mean, they were unable to sell them, so just to sell them, they were giving it at a much lower interest rates or whatever. And I mean, the whole story, it's going to take a while for it to come back, in simple terms. Yeah. All right.
So overall, you're not like concerned about the market right now, right? It looks like it's holding up.
I am not. Definitely not.
Yeah.
See, the only concern right now for us is what happens on November 3rd. Okay, when they say they said they are going to start tapering in the middle of November. That's what they said. So on November 3rd, they say they are going to. Well, I mean, there is some talk again. Talk doesn't mean much unless you see that in action. So far the market is not worried about it. But on November 3rd, if they say that they are going to increase the amount of taper, or finish the taper really fast, that could be a problem. But so far, Powell has been very accommodative, and they are not thinking about raising rates at all for a while. And the one I've been sending this almost every day, but this is the one chart that needs to be watched every day. It opened higher, but it closed lower. This is when this was moving lower, Nasdaq was moving much higher. This is one chart we need to watch. And my personal opinion is, as long as it moves higher slowly, and I think this is 2%, 10-year 2% is right here. What is that? 1971. So if it goes there really slowly, I don't think we should worry about it. But I mean, a move like this, everybody will be worried if things move like this, parabolic. But so far, looks okay. And also, I would watch oil. If this thing moves much higher, if this goes to 100, yeah, we'll probably see problems again. And what I'm mostly looking at is the leaders. How are the leaders doing? So if there is a correction, the first thing that would happen is leaders will start to fall down. That's where most of the smart money made the most money, and they will start selling them. So as long as that does not happen, and because we are trading mostly the true market leaders right now, we will know that we will lose money in our portfolio as soon as that happens. So at some point, this is gonna. I mean, we will probably see a much bigger correction. I don't know how long they can, pump money to keep the markets up. They can't. So we don't know when, but let's not buy. There's no point in worrying about that either. As long as the stocks are doing good, they're setting up, making new highs, we are good, I say. If you guys send me any questions in the Slack channel.
KP, can you talk about position sizing when you get a chance?
Yep.
KP, can you get into Tesla?
1 second. All right, let me finish that position sizing. So, okay, this is how I evolved in position sizing. Okay, I used to do 2% for a long time. Okay, 2% per position for a very long time. That's also because I did not have conviction on very few stocks. Now I am doing 5% per position on all the stocks. Options not a lot, probably less than 1%, actually 0.5%. That depends on if it is Microsoft, I won't mind going up to 1%, because the technicals on the mega cap work much better. They are as good as indices. Okay, when they break out, the breakout is really strong. It does not just happen. I mean, that's one of the reasons I took Microsoft today, is because whenever they break out, it's going to be really good. I mean, it's not gonna go back right away. Higher probability of that working. So right now, what I'm doing is 5%. I'm doing 5% each, and the maximum stop is 0.5% of my portfolio. So I'm giving about 10% leeway on any stock right now. And if you look at most of my stops, they're probably around 7 or 8%. And sometimes when I see or I don't like the market, I come down even with 2% or 3% loss. So that's
KP, I missed the number. Your stop is 0.5%. Is that what you said?
0.5% of my portfolio.
Of your portfolio. Got it. Yeah.
That's about.
And this is for.
Yeah.
This is for stocks or this is for options?
Stocks.
Because 5% is on stocks. Okay.
Yes.
And options, do you have any?
Of total portfolio, yes. So basically, if I'm fully invested, I'll have 20 stocks. 5% each. Well, I mean, when you have a smaller portfolio, you can do 10%. I mean, eventually, that's what I want to do. I want to go up to 8 to 10% and have just 10 stocks. I mean, managing 20 positions haven't been easier either. Right now, I don't have 20, but so I would say start with a smaller percent, and as you get more and more confidence on certain patterns that work or certain stocks that you like, you can go higher. So for example, if I'm buying Apple stock, I won't be buying 5. I will probably buy 10 or 15, because that thing does not move, right? I mean, the risk is very less when you're buying Apple or Microsoft or Google. They don't go down like 4 or 5% in a day. They don't, unless something really, really bad happens for the market. If Microsoft or the mega caps go down 5% each, we'll see the index go down 5%. So they do better than the index.
And I assume this is for your long-term. I mean, like this is your portfolio, right?
I'm
but
doing that
long-term portfolio trades also.
I'm doing the same for both.
Okay, got it.
So for my long-term, right now, whatever I have posted, the positions that I have 14 positions, 5% each, and the rest of 30% is the Bitcoin, GBTC. I have GBTC of 30% of GBTC.
And do you follow any laws for options?
Say that again.
Do you keep any stop loss for any of the options trades, or it's just once the level is hit, you exit the trade?
Well, most of the time, okay, for any of this, right? So when I said that 0.5% of my portfolio or 10% is the maximum loss I would take, that 10% is the maximum amount, right? The same way, let's say for options, if something goes down 50%, it means that, I mean, if I buy an option today, like for example, I bought TAS today, okay? Tomorrow, if it goes down by 50%, I mean, I'm going to still wait and see, because I know the reason why it went down, and I know how it's gonna behave once. I want to see how it is gonna behave once they price it. So for that, I'm going to give a little bit more leverage or leeway. But generally, 50%. If something loses 50%, I don't want to be in there. 50% of the option. But because I'm buying mostly at a specific price for these, I'm not even waiting so much anymore. I'm probably doing 15-20%. I don't like it. I'm at least selling half of it. So something like that. For example, today I sold CCJ. I mean, it is still looking good, but there are certain things I don't like in CCJ right now. I mean, when I got in, I was worried about the gap right here. This was the opening gap, right? So this could be full. This could be filled tomorrow or day after. The way it was moving today, this can be filled. So that's why I cut it in half, the position. So did I answer your question?
Yeah, you did. Yeah, thanks.
Yeah,
you did.
But TAS already went down after market close, right? But around, it was 72, it came down to 67 or 68, right? After they announced that offering.
Yep.
So, but technically, I mean, like logically, that should go down tomorrow, right? More.
Well, I mean, yes, you are right. Yeah, tomorrow it will go down. How much it will go down, or how many buyers will come in to buy it, we don't know. And then after hours is generally not a good measure, and we'll see how it does tomorrow. But technically, I mean, if this move happened without this news, and if it even moved, probably, let's see, how was it today? And the reason I bought it today is because it took care of this one and took care of this candle. So that's why I got in. So technically, if it breaks below this level, which is around 71, let's say 71.50, I should be out. But we know why it's going down. So I want to wait and see how it does.
Actually, I have a full position task. So I don't know how to, I'm still holding it. I think average price is around 76. I just want to get out as well, but I'm waiting. Maybe if it hits 76, right, or hits my price, I will short a call. So that way, it will at least cover in the. I can hold it for a little bit more longer. That's what I'm thinking. Is that a good strategy?
Well, I mean, for whenever you get a move based on the news, the only thing that we can do is reduce the losses. That's it. There is nothing else we can do, right? I mean, it's not a shock for you, but it's for everybody who has been buying in the last 4 days or 5 days. So that's the same thing with earnings. One of the reasons I don't trade a lot of earnings is because the risk is very, very high, because I have no idea where the stock goes. So my edge is nil. I don't have any edge. Technicals doesn't work. Nothing works. Not really. If they give really good results, it goes much higher. If it does not, it goes much lower. So any news-based event, the only thing I'm thinking is how to reduce my loss. So, but here in this case, for how much is this? $5 move. Yeah, that's my option will probably go down 35% or 40% or 50%. That's a possibility. And there is a good possibility we'll see a lot of sellers first thing in the morning. But again, we'll worry about it tomorrow. But if it takes out this entire candle tomorrow, I'm not staying in there anymore.
KP, any thoughts on Apple?
Apple actually did much better than I expected.
Right. I mean, normally it should tend to fall right after the event.
It does. But
No,
yeah.
no, they announced amazing MacBook, right? So, and also AirPod 3.
It doesn't matter what they do. I mean, in my experience, anytime they announce anything, so but there is something else that happens generally. What happens is, when was their last announcement? Somewhere here. Yeah. I mean, so there is a move before the event starts for the next few days, and that's when it gets sold off. So I mean, that could also
they announced around 140s. Yeah, last time they announced around 140s.
Oh, right here.
No, the left green candle. Yeah.
Over here. Okay.
Yeah.
So, well, I mean, right now this looks good. The way it moved today, anything above 144 was this 144.45 is my level to get in. That's how I got in, of course. So if it goes back and tests this one, yeah, we can probably buy it again.
So what would be the next target level? What is the target that you're looking at?
Right now, the 50-day. I would say the 50-day right now. Let's look at a few more levels.
50 days. I think it's already there, right? 50-day, 146 point something.
Yeah, until it breaks it. I mean, that's the point about the levels, right? Unless it breaks it, it's not broken. So
okay.
How do I play long term on Apple, KP?
Stocks. That's it.
Options.
Again, options is actually for Apple. Actually, does not matter. Actually, you can just buy options, and the theta is very, very less. You can buy anything. If you let's look at some of this. We can probably go. I don't know. Okay. Whenever I want to look at anything that I want to keep for a longer period of time, I generally look at next year, April. That's because the bull market is generally from November to April. So those are the best months in a year. So, and here, based on the delta, you decide whatever you want. I would probably do at least 76. So anything here should be the same. And if let's say if you're buying 90 delta for $62, this is as much this is not much different from buying the stock. I mean, you don't have to put 14,000. You could just buy 6,000, and this will be almost equivalent to that 14,000. You see what I mean? 90.
Oh, that's at 85 stock price.
I mean, again, it depends on what you want to do, but yeah, this is as good as buying the stock if you're buying the stock. Look at the theta; it's very, very less.
Mm-hmm.
So,
because I feel based on their announcement today, it's a game changer.
That does not mean it's going to do better. I know. I mean, we will always feel that if that happens, you would probably want to use a similar strategy again, but I wouldn't do that because the only thing that's true is the price. Okay, if this goes down, nobody knows what happens, and also what happened today is only based on the information that we know until today. From tomorrow, we don't know what's going to happen. So there was somebody else.
Okay. KP, if I were to sell a covered call on Apple, right, what would your suggestion be?
Covered call is a bad idea for this one.
Not for Apple?
Yeah, it's not. I mean, you would sell a covered call for the one that has a huge premium, right? I mean, the premiums are really, really less for this one.
Okay.
I mean, if you are buying Apple, it's safer than buying S&P 500, almost. So think about it. You won't make a lot of money. it is going to move slowly. That's what I mean. So, but for many long term, buy it and forget it kind of stocks. This is one of those. Actually, all the mega caps are one of those. You don't have to worry about it. Unless the market goes down, they're not going to go down.
Yeah, after that big split, what they announced, the stock hardly moved. It made a big move after the split, then it's moving sideways.
Yeah. Somebody asked.
I think Apple is the first American company to hit 100 billion profit. I think because it's a huge number, right? So after this quarter will be amazing. That's kind of my guess.
For stocks like Apple, my opinion is market already knows what kind of return, what kind of profits Apple is going to give, because there are a lot of analysts following this. They are trying to get as much information as possible. That's Apple cannot shock the market, not really. So that's my opinion. That's why most of the move happens before the earnings, if the earnings are going to be great.
Yeah. No, I think like next week or two, there will be a lot of upward revisions, because if you look at that AirPod, right?
Yeah.
That's about $25 billion business. And now AirPod 2 used to be 120. Now they started at 180, the newer one. AirPod Pro used to be 200.
Yeah.
And now, they are everything upselling. They are selling $19 cleaning cloth.
well, the thing is, there is another thing to remember, especially in this earnings, their costs are higher, much higher. Okay, most of the, I would say that most of the material costs are up at least 25 to 30% this year. So going forward, even if they haven't spent it, the last quarter, they will have to spend the same, at least 25 to 30% more next quarter.
Mm-hmm.
So we should, again, this is one of the reasons I don't do the fundamental analysis. There are too many moving parts in the fundamental analysis. There is so much information to understand. I don't do that. That's why, the best thing for me is, watch the price action, just follow it. When it doesn't work, get out and, find something else.
You had a butterfly, right? That did really well today?
Not Apple, it's Amazon. Oh no, the butterfly, I sold it on Friday.
Oh, okay.
But I bought November calls that I sold today, but I sold it.
Okay.
Yeah, just before the event, and I've seen Apple go down before the event many times, so it didn't make any sense to take the risk. DV, you were asking some question.
Yeah. Tesla.
Oh, we already discussed Tesla, right? What was your question?
I know, just to go to make it a little bit. Not 10. Okay. So when did it go to 900?
You are breaking up.
No, when did it go to 900?
For the first time? January 25th, yeah.
Like this, like Zillow, you don't think like these people will sell it off? I know a lot of people who bought it. I know some of them who bought it at this price, but you don't think these people may sell off when it reaches? Sriman.
There will be, yeah. I know what you're talking about. Yes. So most of the time when it hits the highs, forget about 900. It could just move sideways right here. But only if there is no new information. But we are getting new information over the earnings, right? If the earnings are not good, it's going to come back. If the earnings are good, it's going to break out and move higher.
Earnings are good. I don't. You don't think because of the tapering and other things which are happening in the future markets, You don't. I know. I mean, maybe it may
That
go
tapering has nothing to do with their earnings, right?
and then it may crash.
Okay. Tapering has nothing to do with what's happening with Tesla. Not right now.
That's correct. But still.
And the second thing is, it's not like it. This is think about it in this terms. This is January. This is October. That's almost 9 months. You had a 9 months base. It did not. Anybody who bought this, they are holding the same stocks without making any money for the last 9 months. So when this breaks out, you will see a lot of buyers come in. There is no doubt about that. So, I mean, when a stock does not make any money for the last 9 months, what does that mean? That's all. This is all the digestion. This is a crash, more or less, right? I mean, 900
yeah, but KP, sorry to interrupt you. People who bought at 900, I know a few guys.
Yep.
They are desperate to sell at 900 because they got at 880. Like they averaged also in 800, and now finally they are breaking even.
So
and they will all exit now.
Yeah, how many people are there? That's what you can see right here, right?
Okay.
Above 880, there are only 2 days or 3 days. Actually, not even 2, probably 1 day. Okay. There are not a lot of supply right there. You do have a lot of supply right here. Okay. And generally, you would see, because there is a lot of supply here, we could probably have a similar sideways move right here. The same way as well, because all these guys are selling right there.
Yeah. One other thing I wanted to ask your opinion is, if you see 900, that oval shape you did, right?
Yeah.
That time also it was a way overbought position, right?
It was.
Like.
Yeah, and even that was the earnings. See that? That was also earnings, and suddenly it crashed. It came down. See the sharp decline after the earnings.
Well,
and why don't you think the other thing is institution can dump, right? I mean, there's a possibility they can cash it because
who do you think dumped right here?
Institutions, no?
It's everybody, not just everybody dumped. I mean, it from 900 to 550, 540. How much percentage is that?
So even here, right? The people who bought at like 530 to 600 to 700, they may cash it. I don't know. I'm just thinking.
Why would they? If they are making money, why would they?
It's okay. I mean, you never know how the next year will be, right? So there's a possibility they may cash it.
No, I mean, anybody who is long in the long term, okay, that's what we are talking about. The fund managers and everybody. Hold on. Let me finish this. So this was a 40% correction. Okay, this is a 40% correction because people sold it big time, and a lot of people sold during this correction. Okay, a lot of people. And the reason most of the time you get this cup pattern is because all the sellers are drained right here, and there are no more sellers. That's the reason it's not going down anymore. You have more, whatever is being sold here, there are enough buyers to, take it. That's the reason it has been moving higher, because people who wanted to sell, they already did right here. And yes, we will, as Arvind was saying, yeah, because you have a bunch of volume here, we'll probably see a bunch of sideways move right here. But again, only if there was no information. But if Tesla gives amazing results, this will break out and we won't see anything anymore. Believe me.
I mean, I think it's not earnings, right? There is not much surprise in earnings. If they say, I'll make 2 million cars next year, then it will hit 1,000 immediately in a heartbeat.
So I don't know if you followed this or not, but I think this started gaining importance when they started the FSD software. FSD, when they started their full FSD, what is that? Full self-driving capability. Think about it. Again, you know, we cannot just think about, nobody cares about what happened so far. Believe me, nobody does. What are the plans next? Okay, if they say they are gonna start that FSD soon, again, we are talking fundamentals. I'm not very really great at this, but if FSD, if everybody starts using self-driving a lot, that's a game changer. Okay, think about Uber and Lyft using their cars. They don't need drivers. Okay, forget about that. If Tesla decides to start their own service.
KP, let's get there. Okay, FSD, even Uber and Lyft, I mean, they buy it. I don't think there is a laws gonna change right away, like in the next year, where I can book a Uber and they will come right to my doorstep or right in front of my home. I don't think the laws will, maybe.
No, law will change, man. See, there is no technology.
Let's say again, the price will reflect what happens in the future.
Understand, but what I'm saying is that may happen in 5-10 years, because there is
no.
Maybe 5 years.
Not 5-10 years. Believe me, analysts are already they are expecting it to happen very soon. Not even 5 years. Much sooner than that.
Happening in Phoenix, Arizona, some far off places where you have less population or plain roads. I mean, see, it can happen, but there are a lot of legal issues, right? Still, no one started discussion on it. If you look at the DOT or anything, right? What I'm saying is, of course, there is of course, it's going to happen, but the chance of happening right away, next year, I doubt it. I don't think the price action just based on FSD will show the next years, or maybe like 10 years or 5 years growth now.
Okay, so this is my point. Okay, the thing is, I don't have all the data, right? I mean, why the stock moved from here to here, I have no idea.
So I did a little research I can share. So stock moved because of FSD only. So if Tesla says there is no FSD for 5 years, it will tank to $400 in a heartbeat. Everybody is betting on their taxi service. That's a game changer.
It is.
FSD is a game changer. Their battery is a game changer. Their car is not a luxury car, even though
again,
people are paying $100,000 car. It's not a luxury car.
Again, Arvind, DV.
Yeah.
The thing is, I'm telling you, we are retail investors. We don't have all the information. I can assure you, there are so many people doing a lot of research and buying this stock. Okay, they are buying this for the next 5 years or next 4 years, next 3 years, whatever their time horizon is. We discussing or figuring out why something is moving would not make any sense, because we only see the data that comes out on Twitter or the news or whatever. But these guys who are doing the research, they have their own metrics. Okay, they have their own models. Okay, our job is to figure out what they are doing and run on their coattails. That's the only way we can do better or make any money. So for me, as I said, NASDAQ did not hit a new high, and this is already at the new highs. That's all I need to know to understand that there is a lot of buying pressure. If we talk about the fundamentals of each company, we won't be able to invest in one company either. Okay, because there is so much information that's out there that we don't have access to. No point in discussing those things anymore. Anyways, what's next? Any other tickers, guys?
What do you think of NIO?
Yeah, I saw it today. I got an alert on Friday, I think. Yeah, it's just starting to turn around. Well, I mean, right now there's not much to do. I wouldn't even worry about it right now to buy this, or I'll probably wouldn't even look at it until it reaches that 46 level. Well, I mean, this is also a level, but it's not much. But this is a major swing level, and this is a major swing level. So, and then this could end up to be a cup pattern, or cup and handle, or whatever, and a breakout. That might be a little better place to even look at it. But I don't know.
I always wanted to ask you one question. Why don't you believe? Why you never believe in strategy where you getting into stock when it hits the bottom, right? I look at the graphics and down, but when it retraces probably to 50 or even below that, right? So you never.
Kashi, you're breaking up.
Oh, I'm sorry. Can you hear me now?
Yeah, go ahead.
Okay, so I don't know how much, but I have to repeat. So don't see you believe in a strategy where like getting stock like when it has bottomed out, probably have an upside for the long term, right? So you have an upside probably 2 years or 3 years down the line, probably it will like double up, right? So you have to support that strategy. Is there a reason why you never buy stock, like very good stocks, even if they're in the bottom?
Well, you are breaking up a lot, but I got the gist of it. What you are saying is, why wouldn't you buy this one here, and only you would buy it when it hits this level, right? Is that what you're asking?
Yes.
So there are two kinds of investing you can do. One is when it pulls back. That's what all the value investors do. When it pulls back, they will buy the pullback at supports. Okay. The other one is which is more or less, that's what they call, buy low and sell high. That's a philosophy, and a lot of people follow that, buy low and sell high. Okay. But it will take a long time. It will take a long time.
Successful one.
It depends. It depends. So it depends on what you are looking for. It's not like it won't be, but first try and figure out when the market is at highs, why is it at such lows at all? There is a reason for that. It means that that stock or that company has problems. We don't know what they are, and I don't care what their problems are. Mine is to figure out which is going to move the most in the smallest time interval. And that's not going to happen in stocks like this, because you have a lot of, as I said, a lot of supply. People are going to sell it. So this is not going to go straight up like this. Okay. However, you take any stock that's breaking out, that's going to go straight up like this. It will, because there are no sellers at all. That's a simple reason. When you say, but again, think about this. Square is probably one of the first one I bought during, the last year crisis. Okay, and what is that? No, 60, right? Yeah, this is where I bought it. So I did not buy while it was breaking out, but at this time, which is April 9th, let's say. Let's look at what ES was doing. How far was it? Yeah. So look how far it is from the highs. It is far away, but Square is, so for any of the leaders, right? This is what it is. For any of the leaders, they are not going to fall a lot, and they're going to recover fast. You want momentum in your favor, you find the ones that have a lot of buying pressure. So stocks that have a lot of buying pressure, they don't go down a lot. So as you said, I mean, I know what you're talking about, and that a lot of people do that. I mean, most of the people who come on CNBC, that's what they do. They wait for the pullbacks and they still buy, you know, I'm sure they're still buying this Caterpillar, okay, because of this huge move lower, because they can see that, you know, this will go there. It doesn't matter whether it takes 1 year for them, okay. They don't care if it stays here for a while, as long as it does not make a new low. As it moves higher, they're okay. If it takes 1 year or, you know, 18 months, they're okay as long as it goes higher. But for me, I want this to move really fast so that I can, you know, I can compound my money first thing.
But
KP,
Yep.
do you, the infrastructure, right? Do you think this is already priced in?
I don't know. I have no idea. Well, I mean, based on this, I mean, I don't know if the infrastructure bill is going to happen or not. I mean, look at that. This, but again, let me take it back. Again, we are talking about fundamentals. I'll give you my 2 cents. Caterpillar could also be down because of what happened in China. Okay, Caterpillar makes a lot of money from China, so this could also be because of that. So it's never one single event that's gonna dictate where the stock is gonna go. It's never that way.
Check Nuker.
Say that again.
Nuker, NUE.
Nuker. Yeah, still, I don't know. I don't know what happened. I mean, I saw this and I thought it was doing good. I don't know what happened. Again,
I know Goldman downgraded it, but still, infrastructure when it comes up, right? Definitely, this isn't.
This is an inflation play, no doubt about that. This is steel is an inflation play. Any material, most of the material stocks are an inflation play. But I think this one looks better. I don't know, it's the same thing. Yeah. Well, it's not a play right now, so no point in, you know, talking about it now. The maximum that we can own is probably 10 or 15 or 20 stocks. There are thousands of stocks out there. When it starts moving, when it breaks above this 110 level, or, you know, breaks above this 50-day moving average, this we'll start to look at it again.
Today I went all in on coin. All in.
KP, here is my interest.
Yeah.
So what are you thinking? What are your next buys? Like, what are you thinking? Like, you probably have like, hey, here are these 10 out of 10, I might go 1 or 2, right? But that way, because I'm not in front of, Slack, and sometimes I miss totally. I missed the net. I missed like bunch of them because that week I was very busy.
Well, I've been sharing this every day, right? I mean, whenever I add it, this is what I share.
You did on net, but net is I agree with you, the other person, right? Even I missed it like big time. 114 was the right time to enter it. I did not realize how big of a monster, even though KP you said that. So I think that was a great miss, and also UPST.
Well, I mean, the reason I am doing this TML is not only it would be easier for you or me, but anytime I do my research and I see it as a viable buy, I am adding it here. I mean, if you are watching this every day, you will see most of my buys. I would say it is 80 to 90% of my buys are from right here.
So this is what this is your portfolio, or this is your tracking?
No, this is based on my research.
Okay, but is this your but do you own all of this in your? Okay.
I don't. But these are the best ones. When they start moving, these are the ones that I'm going to put all my alerts on, and you know, these are the ones that so most of my research, I don't do it during the day. Okay, I do it after hours. So when I mean, believe me, when you do research, when you're not in the market, that's going to help you a lot, because that gives you time to think about it and see whatever metrics that you want to see or watch, and you will come up with a, you know, why you like something. If you want a fundamental reason to like something, you can probably go do the research and see, you know, in which industry it is, and what their earnings are, how did they do, with their sales recently or in the last 4 quarters or whatever, and how is it doing when it is compared with the, in the industry with their peers. And those are the things you can do while we are in the market. Yeah, go ahead.
Yeah, I was thinking it would be helpful, like if we focus on this and go over charts of these, that way we know, okay, maybe tomorrow it's better to get in. Because I think, I mean, personally, I used to look, but then I stopped looking because this was more a watch list, right? So we did.
It's not a watch list. It says true market leaders, right? I mean, that's what
I know. See, as I said, like I've been busy at work, and then I didn't really look at it, and then I missed all of your long-term, most of the long-term investments. I think particularly Net and the UPST, I think they were like super winners, right? So.
And I didn't know that they are going to be winners. Those were doing better, so I got into them. And nobody
I had Net at $60, so I sold them long time ago, right? Remember in March time frame, it was not moving at all. You used to say you have in long term. As soon as I got break-in price, I sold them for pennies actually. So this would have been game changer. Same thing with Tesla. I think we've been watching since 5:30, but we missed like almost doubling of from 5:30 to 8:70. So,
well, again, it depends on what kind of whether you are going to buy low or sell high, or you buy high and sell higher. That's you will either be in this one or that one. Okay, you can do both. So for me, breakouts is something that I've been doing forever.
Yeah, I know. I think you're in the fast moving lane. So you are there for a day, maybe a week. So you are cutting down Net, right? I thought that's a really long term. So what's your long term portfolio horizon? Is it more on a percentage basis or?
No, I mean, I cut down. It's up 35%. I cut down only 20% of my position. So
okay.
It's not a big one. It's a pretty big position even now. So, and the reason I cut it down is because of the amount of move it happened. It's up 70%, more than 70%, I think, around 70% in the last. And look at the time frame. How long was it?
Yeah.
10-1. So in 18 days, I don't know. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12. So 12 days, 70%. That's 6% a day. That's crazy. Okay, and one of the reasons I always do that, and the reason I did it today, is because you will see the climax with a bang. Most of the time you will see the climax with a bang. Doesn't mean this is the bang. We could get a bigger candle. What I mean by bang is the candles when it at the extreme, the candles are bigger. The next candle could be bigger. This could go to, who knows, 210 tomorrow. I'm going to cut another some more. If it goes to 220 or 210 tomorrow, I'm going to cut more. That's how the climaxes happen. Because a lot of people will come down, they'll sell it off. And it will probably come back to 160 or whatever. So, and because this candle is bigger than these candles, I sold it. That is the simple reason.
KP, the research you do, is it primarily based on chart analysis, or you also do some fundamental analysis or news events? All those?
Well, as I said, right, I mean, here when I say, hold on. It's not really different, not a lot different, because the one reason a stock goes up is only when the fundamentals are really good, right? I mean, this, when I look at, are you looking at MarketSmith? Right? Are you able to look at the MarketSmith?
Yes.
We can see it. Yeah.
So the top stocks, right? I mean, which are this 99 means that it is doing only 1% of the stocks are doing better than this. Okay, 99 is the highest rating in this one. So if the fundamentals are not good, generally, it's not going to do this good. That's one thing. But most of the time, I do know what they are doing. Okay, and also the only fundamentals I actually look is this. Sales. That's all I need to know. What were we talking about? That's right here. The sales is up 53%. That's huge. Year over year, 50% is, and it's not just this quarter. 54, 50, 51, 53. They're doing really good. That's why you see all the blue lines. This is another thing that tells me that a lot of buyers are coming in. And my guess is when this went down, there is some huge, actually, let's look at the funds. I look at all these things, but I don't look at anything for net right now. I already own it. And owners and funds here. Yeah, Contra fund. This Fidelity is, if there is a Fidelity in any, if Fidelity owns any of them, any of the tech stocks, they don't own anything that's a shitty stock. They only own the best. For tech, they are the best in terms of research. Did I answer your question?
Yeah, you did. So after you enter the trade, then it is all driven by levels, right? So you do all these research before you enter the trade.
Of course. That's why the list. I mean, that list comes out of the the sales and the fundamentals tells me which stock is good to buy. The technicals indicates where to get in, where to get out.
When and where.
Yep. Yeah, Madhav, you were saying something.
Yeah, like I was looking at an article where Kathy Woods, she sold Chinese stocks, right?
Yeah.
When it crashed, and then now she entered CRSP and a couple of others, which I'm not too familiar with.
CRSP,
I just wanted to get.
Is this Chinese or Switzerland? This is Switzerland. Yeah, go ahead.
CRSP is the gene editing.
Yeah.
So she entered that in SLMG or something. She entered a few. I know she's like buying the, buy low, sell high thing, I guess, like it's at the lowest and she's trying to add.
She holds for a long time. That's the problem.
Well, I mean, her time horizon is 5 years. Doesn't work for us at all.
Oh, okay.
Yeah, it does not work. I mean, she has been buying Path for a while. She has been buying, that's it. And then we were talking about her selling Tesla, and she said that on this day, she sold a bunch of Tesla and she bought UiPath. Okay, she said that this is down 10% and that is up like 30% since a few days. So it made sense for her to buy this. But I mean, look at that. So I mean, she's not a trend follower, obviously. So the only thing that she cares is, she has a bunch of stocks and she will add to it for a while. And then most of the IPOs, especially UiPath, right? I mean, this was a very expensive IPO. It was definitely an expensive IPO. Even pre-IPO, I know a few people who bought it for $90 and it opened at 60. So there was a lot of demand for this one. So when the demand, when it goes away, I think this is going to be a very, very good company, but I'm going to wait for it to, form that cup or, rounded bottom or whatever, or, whatever pattern that is. And when it breaks out, that's when I'm going to get in. until then. But fundamentally, this is an American company.
What's the RSI on this one, KP?
It would be horrible. Single digit right there. Let's see. 9. Well, I mean, it is at 52-week low. So yeah. And but look at this. 76%, 81%, that's revenue. Year over year there. They have 76, 81, 65, 40. What is that? It's amazing revenue. So, and also it's not a small company. It's a $26 billion. After losing 1/3 of its value, it is still $26 billion company. Again, Cathie Wood, her research would help us figure out which stocks are good. But when it comes to buying, the best thing to do is follow the technicals.
Yeah, but we don't need a big brains to be like Cathie Wood. We already know in the market which one's doing good. If something falls down, which is a bottom, go buy it. We'll be the next Cathie Wood. If you have the cash.
Well,
we can post our fund buys and sells also.
No. For Cathie Wood, the bigger problem for Cathie Wood is liquidity. Okay, she's managing $80 billion, right? So to allocate $80 billion is very hard. So she has to buy when it's going down. She cannot be buying while it's going up. If it starts going up and if she starts buying it, she's the one that is pushing the stock higher. That's it. So for her,
this is the same
fundamental
reason why. No, this is the same reason why I asked you the question earlier, right? So like more like a value investor. When stock goes down, you buy it. Even Buffett also the same trading method, right? So he keeps he holds on cash. When stock goes down, he punches on it and then he acquires a big stake.
Yeah, I mean that's what they did, right? I mean they bought Baba just now. They actually doubled or more than doubled or something like that, because they're okay to wait until it settles down. It may not get settled for another year or so. Who knows? But they are okay to wait. And the amount of liquidity or the liquidity they require, they have to do the fundamental analysis. So for us, they are the ones helping us. Okay, when they buy it and when it gives us the signal technically, they're not going to just start buying it and stop it. Most of these big institutions, they are going to buy more and more and more. I mean, generally they accumulate it for months.
Is there a way that we can follow the institutional buys, like actually when they make the buy?
Yeah, I do have it, but it's
so.
I mean, if you need anything, let me know, and I can probably.
No, it's not like needing. Like, is there a way we can set up alerts there? Like like institutional buying. Like,
I get those alerts. I get the emails.
Okay.
Hold on. Let me show you. Let me stop this.
You can exclude